Heidi, ho, everyone. I think we are live and true. I've got Mai on board today. Thank you, Mai. How are you? I hope everything is going well in your part of the world in these very, very uncertain and crazy times. Welcome, everyone. It's nice to have you on board for Happy Hump Day, and I hope so far it's been kind to you. And I hope for the next hour or so it's a little bit kinder. Got a funny feeling. Got this feeling in my bones. Sorry. It's not going to be that much fun in terms of trading the market because it is very, very sleepy, is it not? Waiting for something, no doubt. And of course, we spoke about that yesterday. Whether we get fortunate enough to get some movement or not today is, of course, as always, in the lap of the trading gods, and the trading gods are just having a little bit of a sleep. I'm going to very, very shortly investigate, and we spoke about this yesterday, how the market seems to be ranging. Yeah, it is. And everyone's saying, oh, Jeff should be having a field day because he's a range trader and all the rest of it. Well, not a field day. And I'm going to go through a few pairs and see what is ranging and see if we can take advantage of it. Because it's not just a matter of its ranging. It's a matter of getting into the market safely. Otherwise, you're scalping. And look, scalping's fine if you know how to do it and you can control yourself and you've got plenty of time in front of the charts, or at least an incredibly concentrated amount of time in front of the charts. But let's do first things first. And as always, pound US dollar is what we look at. And the reason we look at it is to see if we've actually got a potential for a breakout or trading a breakout. Now, clearly it is in range. There's no question about that. And like I was saying, it's not always the fact that it's in a range that makes it tradable. When you've got price action like this, over a 24-hour period, that makes it a little bit more difficult. And if you can envisage, well, what I'm seeing higher lows and lower highs. And that only comes to one thing, doesn't it? There'll be a breakout. Yes, there will. When? No idea. Where? No idea. Absolutely no idea. Preference, and do I have a bias? Sure. But inside this range, wow, it's just there. I can't see anything there that entices me to go long or short. The one thing I would say is the last time we came off the range of, the boundary of the range was to the bottom side. And when that happens, I'm looking to trade to the high side. But where's my higher low? As I said, we're getting lower highs and higher lows. And that's not a very, very nice market to trade. So, and this is typical, it's the range getting smaller and smaller and smaller that makes it more difficult to trade. If it was extending, it makes it not too difficult because you can play false breaks off either side. But when it's contracting, it does make it very, very difficult. That said, can we trust it today to break out of this range that we are currently in? As you can see by the hourly chart, when Europe came in, they did move the market just a wee bit. Is that to continue? Good question. But the result is it really has broken out of this inner range. So that's kind of preempting what we want to do, right? So why would we now think that we can break out of the breakout? Doesn't make sense, does it? So for that reason, I won't be trading the pound US dollar breakout. If we were underneath the weekly pivot, I would think, yes, much better prospect, because you could put your entry 5 pips above that bar and you could put your stop loss even 3 pips below that bar. And then you could trade with a reasonable amount of confidence that if we did come to here, we would go to at least DR1, which is what has happened. And that's where you need to take profit. So that said, I'll have a sip of my tea before it gets cold. And I'm going to go through the charts. I'm going to go through the charts on a 4-hour basis and see if there is actually a range in here that or anything, could be anything, could be a triangle, could be an ascending channel, descending channel, anything like that. So I'm going to have a very, very quick squeeze through every single one of these 29 currency pairs and see if we can actually find something to trade. I'll take all these off and we can come back to them if they're reasonable. Is this in a range 4-hour chart? Yeah, look, kind of is, but like I said, it's contracting like the others. So it's really not that useful. Move on to the next one, Aussie Swissy. Is that inside a range? Well, it's just broken out of one, hasn't it? Now, that might be interesting to play a false break. So we'll come back and have a look at that. On the hourly, there you can see that range break. The candle's too big to trade. Otherwise, I would think about putting an entry short underneath that bar so that we can trade it down to the bottom of the range. False break. It may yet pick up or pick that up as a result of a back into the range and retest at the top. Then you could go. But that candle's a wee bit too big, in my humble opinion. So we'll move on to the next one. Aussie yen. You'd have to call that a range, right? But again, there's an issue. If I put the range where, let's say there's a high. So 2 equal highs, that's what I'm looking for. 2 equal lows is now the next thing I'm looking for. So you could say that low there and that low there and that low there, that could be the bottom of our range. Or if you want to go to the extremes, you could probably make, they don't have to be low lows, they can be open closes. That's fine. So I would say that's the bottom of the range. But the problem there is you've now got an inner range and you would have to isolate that. We can do that. That's no problem. So let's come back to that and do that. So Aussie yen. We'll have a look at Aussie. And of course, it's been ranging for days in that very, very tight zone. But moreover, if you have a look at this, it's been ranging for quite some time. And we know that because we wanted to trade it short. Aussie Kiwi very quickly. Broken out of that range, now back inside. That's a little bit interesting. That's a monster false break, no question. But no, I don't think so, not for me. Aussie US dollar. Same thing. It's broken short to the range. That's now a false break. It's come back inside the range and is in midstream. So tough to trade from there. So I'd give that a miss as well. CAD Swiss. I mean, you could go back and have a look at these, right? But I'm going to isolate the ones that I think are the best. And throughout the show, if we got the opportunity, we'll come back and see if there are actually setups. CAD Swiss. Is it ranging? Yes, it is. But again, that recent range has just been broken. And again, you could look to play a false break, but the candle's too big. The breakout candle's too big. And the problem with it trading it the other way is that it's got to get through this low here. So this is why I'm saying it's a very, very tricky market to trade. Yes, there's going to be a lot of false breakouts, but do I really want to place a long here with a stop loss there to get potential reward to the weekly and monthly pivot? No, it's not good enough. So just move on. Next one's CAD yen. Is that ranging? Well, yes, it was. And now it's kind of broken to the low side. That might be worth a look in terms of break and retest, which has happened. But yeah, getting into the market here short is not a great idea either. So again, a little bit on the tough side. And you can see these intraday ranges are just messy, completely messy, and you have to ignore them, in my humble opinion. So looking for a pullback there probably on CAD yen. Swissy is, Ash, g'day, mate. How you going?
Oh, yeah, not too bad, mate. Not too bad. Maybe just to give everybody a note that I am looking at a short in the FTSE, and it may well shape up in the next few minutes.
Well, mate, I'm just doing isolating ranges, so you might go to that, and we'll come back and do this when we've got a spare moment.
All right, let's do that then.
The reason I'm doing that is the market is at a standstill in most cases, currency market anyway.
Yeah.
And the idea behind that happening is range traders should be having a picnic, but it's not necessarily the case because the ranges, whilst they're there, they're very, very messy and they're not clear cut. So that's why I'm going through to see if there's any opportunity for us.
Yeah, well, this is I want to go short. I'm ready to pull the trigger. The problem I've got at this stage is that we're in a little buy zone down here, or not far away from it. Let's see if there's enough room. There's about 10 pips there, but I think the risk is going to be too great at the minute. I don't mind that. What I'd really like is to see if we can push into this kind of the high end of this bar here. So anywhere around the 70, 80, 70, 78, I'm okay with taking a trade. It's, as I say, it's just a little bit too close down there. But at this point, I'd be okay, because if we can get there, then we'll have around about a 30 pip stop loss, I guess. There's a little. Let's see if I've got. No, I don't have that, unfortunately. I'm just going to change that to black. This is just my color of choice. A few bits and pieces here, but that's probably going to be as a decent enough stop loss. Let's just mark that area off. Don't mind taking a little 1-to-1 here, but as I say, this is a little bit of a problem. So it's got to get probably about another 5 pips or so to the upside. That might be okay. Let's see what we got there. That's going to give us 22 to 24. Not ideal. Okay, this might be okay. I mean, it's tricky, mate. Actually, let's take that there. I'm going to start edging in here and see what we end up with. I might have to sell this again. Target looks to me like the first contact is down at this point here. So probably around about 70.46, somewhere around about 70.50, somewhere like that for a potential target. And I may well edge into this a few times. So I don't mind taking 3 trades here. One at the point we're at. One if it pushes to this trend line, and one if it pushes to this trend line here. The stop on this is going to be just above this trend line here. Let's do that there for now. But really, if it starts to close above here, I'd like to be out. So a close above 70.94, I'd like to be out, which doesn't quite give us a 1-to-1. It's not too far off, but then if I can get another price point here, then we're starting to kind of get a bit more, then we start to push into more like a 2-to-1 if we get that little push to the upside there. We can put this, and it will be a mental stop rather than an absolute stop. I won't put it in this area, but I will close a position if it starts to push above that level too much. But that's kind of an emergency break point really for me. I like the downside. Good morning, Lewis. I like the downside. I liked it yesterday, but
anything driving it, you think, mate, or just
yeah, I still think this interest rate story is quite pivotal. And also, we did have news, I think, overnight from China that they've got a bit of a push with interest rates as well. So it's it does seem to me like that's the thing that we should be looking out for, the interest rate situation, and I think that is what's driving it. Personally, I think.
What are they saying about interest rates?
Well, I think everybody's really watching, but the fact that China kind of had their push overnight is one aspect of it. But also, I think the fact that we've got the CPIs tomorrow is just putting, just making the market that's just that little bit more nervous about what's going to go on. And I was chatting to my buddy last night about this stuff, and we looked at Nvidia as an example, and we looked at the dividend. I mean, Nvidia, if you bought it in 2016, it would have been $20. Currently, it sits at $700. So you got 3,000% gain, in the last 5 years, and it's an amazing company. We were talking about stocks, and we were kind of discussing, what might be of interest to us right now, and Nvidia always comes up. But if you look at the dividend that Nvidia offer, it's not even a tenth of a percent, 0.09% of a percent for Nvidia's dividend, which
Mm-hmm.
is astonishing. You know, when you sort of like think about how little they're offering, and this is where you start to go. Interest rates go up, you know, bump up 0.5%, let's say, then because of the growth that Nvidia's seen, you know, because we've seen from $20 to $700 in the last 5 years, you might start to think, okay, is there as much growth in this particular stock now, you know, for the next year, let's say, you know, that's what many traders will look out for. And if there's not, then you go, okay, well, is it paying me a dividend? You know, if I park my money there for a while, will I get any kind of return? And if it's only offering a tenth of a percent, and then you get an interest rate hike of some degree, you're going to be much more keen to take some profit out of something like Nvidia and put it into a bank and get what is effectively risk-free money, rather than keeping it in something which might have already seen the majority of its growth.
But the only other question I would ask around that, and I see where you're coming from.
Yeah.
What are they doing with the cash that they're accumulating if they're not giving it out in dividends? Are they reinvesting it? What are they doing with it? Is that capital expenditure?
Yeah, there will be. I mean, this is the interesting thing about a company like Nvidia, is that they far exceed the rate of change of their price, because you know, when they come out with a product, it is just light years ahead of their last product. It
Mm-hmm.
really is a special company, and when you look at some of these companies that are doing this particular kind of, like, you know, going along with this particular strategy where they don't pay a dividend, and they are reinvesting, the reinvestment is paying off, because they are coming out with products which are just astonishingly expansive and modern. And this is one of the reasons that you know, the likes of the crypto space has managed to grow in the way that it has, because of a company like Nvidia, with the technological advancements that they've got. So yeah, they are reinvesting, and it's not such a problem, I think, from an investor's perspective. If you see it reinvesting and getting better, I would have a huge problem with other companies that effectively just pay their directors a huge sum of money, and nothing comes back to the investor, or very little comes back to the investor. I've got a massive problem with that, and there are a lot of companies out there that do that.
Sure.
And this is what really, when you sort of think about what's gone on with the crypto space, this is where the crypto space is changing, I think, the perception, and it might well change the way that people interact with stocks in the next 5 to 10 years. Because if you can get a return of 5 to 10 to 15% from owning a token, and you also get the volatility, which actually could carry that token up 10% in a day, then why would you look for stocks that are paying you 0.1, you know, 0.09%? It just doesn't make any sense to your bank balance. You know, you've still got to pay taxes on that stuff as well, and the way that the crypto market has managed to structure itself, you effectively don't have to pay any tax. You know, there is a way to manipulate and utilize the crypto space that means you would never have to pay a cent of tax again,
Ooh.
legally, completely legally. Like, it's
until
nothing.
you draw it out.
That's the point, though. That's the point. The way that they've structured it, is that you never have to draw it out, because they've now got situations where you can use your crypto as collateral to go and get a loan, and you can live off the loan and then just pay back the loan with rewards. You know, you could have this kind of, like, you know, this cycle kind of going round and round and round, where you are completely tax free. And the other thing about that is that they are taking away the power of the banks. I mean, the good cryptocurrencies that are decentralized, the ones that are kind of going for this decentralized situation, they are taking away the power of the banks, because every time that you put a purchase in, or every time you put a transaction through the banks, you've got to pay. You know, you've got to pay some kind of fee. So this is where the space is not only interesting for cryptocurrencies, it's really fascinating for things like stocks. You know, as investors get that little bit older and they get a little bit more refined and they get a little bit more experienced, and they are willing to take the risks because they're of the younger generation. It's gonna be really interesting. I mean, there are cryptocurrencies that offer synthetic stocks, you know, which are effectively doing what stocks do, but they are the synthetic version, and they'll probably pay a better dividend. So then, why would you invest in a company? And these companies need investment, so it's going to be fascinating to see how this thing pans out. And we're not going to know probably for the next, I would have thought, at least 3 to 5 years, where the investment space ends up sitting. But I would have thought it's quite a dangerous place for some of these stocks. You know, the ones that have been a little bit possibly dishonest and haven't reinvested the money, or they haven't paid a decent dividend. You know, there's a lot of stocks out there that, as I say, just quite happy just taking the profit, and they're doing a lot of accounting jiggery pokery. Will those companies survive? You know, will they get their comeuppance in the end? Probably.
Well, I'm going to leave all of that up to you, mate. That's your thing, right? I'll stick to the currencies, I think, because
Yeah,
well,
yeah.
whilst they're still here anyway.
Yeah, well, yeah, well, they're obviously going for you know, within the digital space as well. I'm at pains to call it a cryptocurrency because they're not decentralized, but they are kind of going into the digital space as well. So that will evolve. You know, it's unlikely that central banks will be gone. But I wonder if the banking sector might be the first thing that we notably see change over the next 5 to 10 years.
Oh, look, I would say almost certainly that's the case. What that looks like, I've got no idea, but yes, I would imagine. Lewis, yes, exactly right, mate. The world's running out of timber. All the hardware stores are out of timber because everyone's been building through COVID. So, yep, bamboo will come into its own, buddy. Don't you worry about that.
Well, this is the thing, isn't it? I mean, you know, you're never going to replace commodities. You know, you'll never get rid of stuff like that. That stuff is the things that we always need. And where I suppose, well, unless somebody got the only
well, it's actually not a need, Ash. It's a want. It's now a need that was born of a want, and the want,
right,
of course, is our greed and our laziness and our softness, really,
yeah,
because all of those things that those commodities are used for, and most of them are non-sustainable, as you know.
yeah,
They were brought about to give us things like we consider them to be normal these days, but you know, things like driving around in cars, you know, you don't need to do that
yeah,
in a world that doesn't kill itself. You don't need to have flying all over the place. But you know, we've gone too far. That's
yeah.
where we're at, and we can't turn that clock back. So we'll never go back to the deep dark ages of the caveman, sadly, because that would have gone on forever
Yeah.
in a balanced world.
Is
But
is it possible, mate, that what we see is well, I mean, I suppose the only comparison I can think of with something like bamboo and these other commodities is some kind of other synthetic product which manages to replicate them that is biodegradable.
oh, look, I've got no doubt science will come up with that as well.
Yeah.
You know, already they're turning things like bamboo into laminated flooring, for instance. You know, and all sorts of things. The
Yeah.
problem with that is they're still using chemicals to do it. So you know, the net is not necessarily sustainable for the planet. It's better. It's getting
Yeah.
better, but
Yeah.
you know, we're a long way from being there yet. But you know, are we going to take away? We're not going to drop all the planes out of the sky and say, "Look, we're not flying anymore because our carbon emissions are too great. We're not going to stop that, and we're not going to stop all sorts of things. The only thing we can do is lessen. And I'm no ecologist by any stretch, and I'm certainly no scientist. It's just common sense to me that that's not going to happen. So where we end up, I really don't know, to be honest. And if we're talking commodities, my heart says this is ridiculous. We've got to stop mining gold. We've got to stop mining iron ore. We've got to stop mining coal. We've got to stop doing this shit, right?
Yeah.
But it's not going to happen.
Yeah. Yeah. No, not while there is as you say, a want. Maybe as you say, there's not necessarily a need. I mean, there's a big push for people going out on push bikes at the minute, and riding. And when you sort of like get the statistics of how close each journey is, each car journey is, and I think most car journeys, 60% is something like within 5 mile, within a 5 mile radius.
It's insanity.
Of course, everybody can ride, everybody can get on a bike and do that.
Well, how about walking?
Or even walking, yeah.
Hey, we might even lose some kilos.
Well, that would be good, mate.
We might even get fit.
Yeah, that would be good. That would be good.
It's nonsensical. And John, yes, plastic is a dreadful, dreadful thing.
Yes, it is. Yes, it is. Might need to just reassess this target. I don't mind adding again. I've got no problem with the downside, but might need to reassess this target here and possibly come out at this low here. Remember, we're looking for first point of contact, so this one doesn't look like the first point of contact anymore. It looks like it's going to be here. So let's see if it comes back down again to that 60 level, and we'll close the trade off there and see what we have instead. But got a little while anyway, mate. Are we speaking?
Yeah, we will go to Ainsley very shortly. I see she's in the room. But
brilliant.
Before we do that, a couple of things I need to update you guys on. I did put another order in the market today, I think. Yes, I did. Kiwi CAD. I don't know if that's... Oh, yeah, it's triggered. Shouldn't have triggered, mind you. But the spread's opened up just enough to take me into the market. Now, if you're not in this trade, and I suspect you're probably not, because I don't know how many are in the Telegram group at the moment, but those of you who aren't in the Telegram group wouldn't have known about this particular position because I only placed it this morning. Now, really, it could very well be early, but it is the first higher low, well, it's actually the second higher low after a clear double bottom here. So it's also across the pivots. So my entry was where you see it now, 87.23, which is 8 pips from entry if you wanted to follow that one. If you don't like that...
We haven't got your screen, mate. I don't know if you're meant to be showing it.
I am meant to be showing it. So I'll rectify that.
Okay.
Sorry about that. So the trade, the order is, for those of you not in it, is trading this bar here. And as I said, it is a clear higher low across the pivots on or off a double bottom. So for that reason, I think it's worthy of our attention, and they are the parameters around which I'm trading it. If you're not in that and don't like that, then there's also many hints here that this is actually going to break through or break out of this range to the high side. Where do I begin? We've got an ascending triangle sitting there. We've got 1 to 3rd test on the trade line with a classic slingshot candle pattern. We've got a few of those actually sitting across another trade line going through there.
Profit taken on the FTSE, mate. Just an update. Profit taken on the FTSE.
Well done, bud. So I can't not trade that, despite the fact that I think the market's up to SH1T at the moment. This is a clear potential breakout for me. So if it doesn't break out, we may well be sitting on the daily and weekly pivot until the news of tomorrow comes out. But I'm hopeful that we can break out of here, and if we do, we'll get some profit in the bank. It's also the hint, of course, of an inverted head and shoulders here, if you want to look at that as well. So many reasons. And Ainsley might give me a leg up here in a minute. because oil will play a part in this, I do believe. And we do have oil inventories coming out today or tomorrow. I can't remember. But that should be interesting. But, it's a clear higher low on or off a double bottom for me. It may be early, as I say. It may want to come down to here first where my stop loss is. And if that's the case, I'll look to re-enter. We shall see. Everything else going on. Euro Aussie. Now, Euro Aussie, we placed this on Monday, and I'm not changing anything. I've replaced it. Of course, these expire at end of day, guys. But I have replaced the order, and I'm trading it short again to break out. I'm looking for this to come down to at least this level and close that, or not close it, but get back into this range down here. So Euro
which one was our trade, mate? The one we were talking about.
The weekly one, Kiwi Swissy.
Euros, Kiwi Swissy. Yeah, sure. It was a buy. Okay.
It's a buy. Nothing doing, mate. It's just another inside bar. So
okay.
Looking that way again today, but the stop loss is still intact, hasn't been breached, so we'll hang on to that one. It's got to do a bit of work, of course, to get up to here, but I think if it does, we'll be in pretty good shape. Euro Swissy broke through yesterday, and we have taken profit on that. Having a little bit of a retest now, or is it? This could well be a false break, but we've already had break number one. So if there was going to be a false break, I would have imagined it would have happened at the top of that bar. It didn't. When I say happened, it should have gone long at the top of that bar. It didn't. And we got a bearish engulfing bar, if you like, taking over again. So I think this downside looks really good to me on Euro Swissy. I like it. And I've got my stops at entry, so this can only be a winner. I'm looking for it to be a decent winner down to here, though, at that confluence area. So that one's still going. If you're in that, Kiwi CAD I've just spoken about. What else have we got going on? Euro CAD was still in that monthly thing from January. I won't continue to repeat. Pound CAD is still in as well. I did consider moving my stops to entry on this, but I think it needs a little bit more space because it may well break out of this range to the high side. And if it does, I'm hopeful that will be a false break and we'll come back inside it before we hit the stop, obviously. If we don't, this may well turn around because it does have a bigger picture that suggests to me that we could be going long here. So hanging on there, and we've been in that for a while as well. I better check the swaps on that shortly to see if it's costing me money.
Yeah. So paying you, mate.
Yeah, exactly. Well, at least we're getting money out of Euro CAD. That's going the right way.
Well, I'm getting negative swaps on the Aussie yen.
We're now got January. We're nearly 6 months into that trade now.
That's pretty good.
I told you Christmas time, didn't I?
You did.
Could well be the case.
Yeah, I'm getting negative swaps on the Aussie yen, mate. Any ideas why?
Just because they can.
Yeah.
I lost the formula for which used to be interest rate differentials, right? But for some weird and wonderful reason, they just make it up, I think.
Well, I think maybe we'll ask Ainsley. Ainsley might have an idea on that. It would certainly. I'll tell you what. If we found out that there were positive swaps on certain currencies, I don't know about you, but I'd be a lot more keen to trade.
Absolutely, yes.
All right. Well, we need to do some research on this, mate.
That's a good idea. Why not?
Okay. All right. Who should we get on it?
John's the quiz master.
Yeah. Or Angel might be the one.
Angel's
or Mai. Is it Mai's
in
today?
Yeah.
Mai's in today. Maybe Mai would want to do it for us. I don't know.
Ainsley can't unmute. She's bursting to say something. Mai, can you give Ainsley some talking power, please? Or is it Ainsley's?
There you go.
There it is.
Hello, chaps. How are
Hello.
we?
Yeah, we're good. So did you hear our question, Ainsley?
Why have you got negative swaps?
No. Which currencies are positive swaps?
None. Don't worry.
None.
Don't worry about it. Because the broker can.
Okay. Same as I said.
It used to be obviously in interest rate differential, but Sorry, and I'm across 4 brokers. Same story.
Same story. Okay. Jeff's getting
I've
positive
got
swaps.
positive swaps on EuroCAD.
Yeah. Congratulations. Lovely.
Thank you.
You've been in it for how long?
Nearly 6 months. 14th of January we got in.
Maybe you've battered them into submission, Jeff.
You think?
They're just going to say, look, just give it to him.
Yeah. Yeah.
But generally, I found that with a lot of my trades, it doesn't matter which way you go, you'll get negative swaps. It just doesn't work.
Yeah. Okay. All right.
You know, at the end of the day, the swaps are a small portion depending on how long I hold a trade. And like I said, I get to a point where if I'm holding a trade, it's consolidating and it becomes 0.5% of the profit, I close it. Because if that trade reverses on me, then that swap is no longer 0.5%.
Yeah, good point.
And it eats it. So it's a very strategic, very blunt business profit and loss approach to the trade. I've got to get out. Yeah. So
what's going on?
Oil, honey.
What's it going to do?
Yeah, $70 a barrel.
We talked about that. We said it was going there.
And it's there.
It is.
Yeah.
So what I'm looking at, I mean, I was looking at it the other day and I just went, So it first nicked 70.01 or something like that. And I thought when it gets to $70, I'll close my trade out. And I've had that trade for a while. And then I woke up in the morning and it went to $70 and came back down to about 68.50. And I went, oh, that was very unpleasant. So, but I've held on and I thought, not doing anything today. So I just held on and consolidated and it just went sideways. And this is after we had a couple of weeks ago, the International Energy Agency. And it's the International Energy Agency telling Iran what it can and can't do and telling, they thought they'd come in and just tell the oil industry that they would have no new projects after the end of this year. And OPEC very politely told them to sod off.
Why be polite? I was going to say.
They probably weren't that polite, actually. And that's where we saw the return, and then the market just has kept going. And you know, there's been those little retracements, and you can tie it straight back to something as basic as the US-Iran nuclear deal isn't working, and they're not. A positive outcome of that is not likely. So, you know, down she came again, and then Iran decided it would announce that it's going to flood the market a bit more, and that was before their friends over at the Kingpin sandpit, the Saudis, said, yeah, no, you're not doing that, boys. So they've kept them on track as well. So we are seeing the return, and just as the US and the UK are all announcing these little bits and pieces of, hey, you can get back on a plane. So there's a bit of positivity, and that's just pushed everything along. The reviewed and revised end of year target is up around $100 for oil.
Wow. I mean, when does really this when does it get priced in? Because you know, the UK, as you say, is kind of flying-ish without it really flying. But so when is the move that we've got? Because I can't imagine that the demand is there yet for oil that justifies this price, or does it? Am I wrong on that?
I think it's just the positivity and its perception, Ash. It's not necessarily, and let's face it, they don't actually go out and they say, oh, okay, we're going to start flying the planes next week. We better get some oil in. You know, it's Thursday. Let's book some oil. It doesn't work quite like that. It's you know, they're looking at it for a longer term scenario.
So when does that particular scenario, you know, become priced into the current run, and where we say now it needs a new catalyst to get us up to $100?
The catalyst will be as all the economies start coming on board, and
so that isn't priced in. that currently isn't priced in. We're still short of
I
that
don't
particular.
think we are. I don't think we
Okay.
are. I mean, don't forget India's still in, and
Yes.
we talked about it a couple of weeks ago, and all of a sudden it's gone sort of quiet. But India's still in a really tight pickle over there. They're really struggling. It's really quite horrid. So whilst that is, you know, a tragedy in itself, it is still the 6th largest economy in the world. Right? So that's a big impact. When you have countries like that coming on board, and there was also that $1.5 trillion small little redevelopment of New Delhi that Modi wanted to do, which included he'll call it a new house for himself, Prime Minister Modi, but apparently it's more like a palace. Yeah, so there's those kind
They
of
do
things.
that in India, yeah.
Yeah, house, palace. Yeah, Taj Mahal.
Everyone else can starve, poor bastards.
Yeah.
Look, you know, yeah. Where was I reading? No, I'll let it go because it was it Cambodia? I was just saying that the GDP per head is higher than some of the other Western countries, and it was a really obscure. Oh, it wasn't Cambodia. They'll come to me a bit. I was reading before because it was all manipulation of numbers, and it's a small number of people had this extreme wealth where the rest of the majority of the population are struggling, living in poverty, and then they just neatly have this very neat bell curve and to say, oh, look, hey, everybody's doing quite okay. But no, I don't think, Ash, everything like that is priced in long term. Otherwise, we'd just see a straight line up, wouldn't we? And we're not. We're just.
I guess so. Yeah. Well, I don't know. I mean, I think we could almost argue it's been a fairly straight line up. I mean, we've had a couple of, what's that? Is that a monthly?
That's a monthly.
That's a monthly. We had a very straight run down too, by the way.
I've just noticed something on that chart. Do these numbers mean anything to you? 44, 55, 66.
Oh, yeah. Are they the years that England won the World Cup?
England never. They only 66. They won it. Oh no, they didn't. So, I just drew these lines on here, and this is 44. This is 55. This is 66, and that's 77.
Wow, that is interesting, mate.
Do you know? Isn't it nice how oil likes levels?
That is.
No, it doesn't.
Nice.
I can't gauge that from that chart.
Just a quick point, but before we get onto this, because I think that is really interesting, mate. I do think that's quite a fascinating
discovery.
Discovery, yeah, it really is. But just before we get to that, when you say that getting back into the air is not being priced in, the drop that we saw, the planes were flying, and we're above that particular price.
The planes were flying back then, but like I said, it's all fun. This commodity, it's not a seasonal thing. There's seasonality, yes, because you have heating and cooling in the seasons. That aside, what we did have there was when it went down 12 months ago in April last year. That was a fight. That was a flooding of the market of supply right ahead of COVID. Okay, so that was just brutal, absolutely brutal, and that's why we got what we got. And countries like China, we know they've stockpiled quite a bit of oil, but they have sort of like got back and they're going gangbusters again, and they're just saying that, you know, the way their economy is going, it's taken off, and they need to put the brakes on it, and blah blah blah. So is that manufacturing starting up again and all the rest of it? Because as we saw there, where it took a nosedive, yes, the planes were still flying. Well, the European planes were flying. Australia had closed its borders by April last year anyway. So it was only domestic. And a lot of the Asian countries had also stopped there by then, Ash. So some of the planes weren't flying as much. But like I said, it was right before COVID. This is Russia. There was a fight between Russia and Saudi as far as Russia was going to be told what to do by Saudi, and they increased their supply. And Saudi said, you do that, we're going to increase our supply and we'll drive the price down. And well, I don't think they quite realized to negative numbers. So I don't think that was really in their plan. But like I said, the timing was tragic. It was right before COVID. And that was when planes had stopped flying. Not in the US, not in Europe. They still hadn't got their head around this COVID pandemic thing. But
Okay,
now it is coming back on, and we are realizing how important it all is, and the fact that planes do still at the moment, there is no electric motor alternative. There's no EV alternative for a Boeing 787.
So we could be
now
looking at.
We're revisiting Concorde now, aren't we? And what's it called? That new thing?
Yeah. Sydney, London, 9.5 hours, I reckon.
Wow,
Yeah,
that would be amazing. Oh, that would be incredible. I could be there by party time. So Jeff, just one more level, mate, to mark off. Can you mark off the low that we saw back in 2015?
Oh, hang on. I just jumped into Kiwi CAD for some reason. That wasn't meant to happen. Apparently not. That's the FTSE there. Oil. The low. Is that what you want?
Not the low. No, that
this
one there. Yeah. But go up so it matches that one there. Yeah. What number is that?
34. So it just missed 33
by. Go down a touch more.
Yeah, we could probably go down a little bit more.
You want me to go? You want me to make the case for 33? There you go.
I think so. I mean, that's. I think that's pretty good, mate. That's pretty good.
It was close enough, isn't it?
Yes. So what we're looking at here is the potential for us to look at 77. Surely that if we're trying to forward think after looking at this analysis, what is the next most sensible level to be potentially taking profit? Surely that would lead us to 77.
Yeah. So if you drop down to a 4-hourly chart, Jeffy, if you'd be so kind.
Anything for you, you know that.
Thank you. So what you normally see is about, on a good run, if you've got consolidation, then you have a breakout, and then you sort of like have 4 or 5 candles in a row, and then sort of like a drift down, and then it goes up 4 or 5 candles, maybe 6, and then a drift down. So you get to about 4 or 5 bull counters, then expect a bit of a retracement. It'll consolidate, and then she'll drift up and then come back down again. So that's just a pretty typical pattern of oil. So we've had last night, we had that move up, and we've had 4 bars. I'm waiting for a bit of a trickle and a retracement back down before I jump in again, if that happens. But I'm a bit worried. She's a bit far away from the pivots there as well. But yeah, she's had a move. I need to see it retrace a little bit more before I can even look at going in again.
It does look like a lovely structure, doesn't it? I mean, it looks such neat. Obvious price points.
Do you like? I like neat,
yeah.
Tidy.
Yeah.
There's a reason I like trading oil.
Yeah, I can see that. Is this quite because obviously we've seen an amazing trend to the upside with oil. How normal is this kind of chart pattern, where we see this beautiful structure? Is this quite normal, or is this quite regular over the last 10 years, let's say?
Yeah, so look at it, and even on the way down, so even when we had that massive move back down a couple of weeks ago, with IEA flexing its muscles, didn't get them very far out of Brussels. So yeah, but look at that move. It was such a violent move. And I don't know, Paul said, what happened? What happened there? I said, it's what it was. And it was just, it can be so sensitive to the news. Like I said, it was sensitive to the news, the idea of oil, fossil fuels, natural gas, anything. It was a fossil fuel type of no more projects. This is what you are going to have to do in order to get this. And it really surprised everybody, actually. That was the whole, but you can see the reaction to it. It was quite a violent reaction down. And then the OPEC came in, and then you start the structure again, okay? The whole 4 or 5 candles up, a little bit of a retracement. It mightn't be a big retracement, it mightn't be a big consolidation, but it tends to pause after about 4 or 5 bull candles, and then we have a bit of a a retracement, and then up again, and then might be a little bit more of a period of time of a retracement and a sideways consolidation. But once you take out the nasty comments, the things that are affected, you can see the structure. So, and it was really neat on the way down as well, going back to 2000 and
just before you go back there,
yeah,
what drove this down here?
IEA, so the International Energy
at that exact
Agency.
time.
Yep. And I could actually go back through the wires, because I was looking at it to break that 66 level, and I went, cool.
Beautiful bull trap there.
And then it just dumped, and it dumped quickly. It just became very violent with the whole move, as you can see with those long tails. That was a pretty nasty move all the way down. So yeah, it was an announcement. It wasn't well received. It wasn't expected, and it didn't go well. And you can see where OPEC came in.
Yeah, I don't think everyone missed it. That's a beautiful bull trap right there.
Yeah. So it just went da, 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 and I was waiting for that break because it'd been consolidating. And then it just, yeah.
I'm just marveling at the structure of the actual price. I mean, even in that area where it got really messy, there's still some very evident. Was that a 4-hour chart you were just on there, Jeff?
Yeah. So
do you want it?
Yeah, just that 4-hour chart. You see the area that it got really messy, where it was, the period to the left, which you circled when you were looking at the Yeah, that whole area, even that, there's some very obvious price points that that the oil market bounced off. And it's interesting because you look at that and you say, okay, well, there's two different strategies you would have to trade. You'd have to trade to make money out of this. But the key would be noticing or knowing which one when. Because if you trade the wrong one at the wrong time, you're going to lose money. But it'd be such a shame to miss out on that trend. I mean, it's just an absolute cracker, isn't it?
Yeah. So you put an ADX on that, and the ADX is going to give you the strength of trend. So once it breaks above 25, you're looking pretty good, and that's a bit of a bit more comfort. If it's coming through and breaking through, and you've got DI plus and ADX breaking above that 25 level, it's starting to roll pretty strongly at that stage.
How many negative signals did it give during that consolidation period on the left-hand side of the chart?
Sorry, this one, let me go and have a look. The thing is, it will, if there's no trend and it's consolidating, then it just stitches. The ADX and the DI plus and DI minus will all stitch below the 25 line. There are a couple of let's have a look.
Because that's the big thing, I suppose. That's the real question, isn't it? What's the best indicator to use for oil? In your opinion?
Well, I combine my ADX with my MACD and the moving averages.
And so that would give you the cleanest view.
Gives me a clean one. Yeah. And obviously the weekly, the pivots, because I can't, it's hard for me to look at a chart without the pivots. So I'm always like, always
same,
done
same.
it. But yeah, it's what you get used to looking at, right? And you can see it quite clearly. And it's always said to Paul, because he's saying, oh, can you explain it to me? And I said, look, when you come over to Sydney, I'll show you. And it's really, really clear when all those line up in a row, it takes off. And it's just like, okay, thank you.
Yeah. But classic, isn't it? The ADX is undoubtedly, well, maybe not undoubtedly, but it is certainly one of the most forgotten indicators that have been invented. I remember a guy called Malcolm Pryor writing the first trading book I ever read, and he was trading stocks and he was trading on the ADX, I think on a daily chart or a weekly chart. And I've never heard about it since. I've never ever heard any other trader talk about the ADX except him and you. You're the only two.
Oh, look, just call me precious. But let me tell you quickly, Wells Wilder was
Yes.
he created the ADX.
Yeah.
He created the RSI.
Yeah, I was going to say amongst others, right?
Yeah, amongst a lot of others, but the RSI is definitely far better known. But
yes,
if you read his original book from 1969 or 71, I think it is. It's back in the days where they actually used to hand plot all the charts. It's I've got a copy of it, and it's hilarious.
What period?
Sorry?
What period do you use?
14. Just standard. Yep. He actually says the ADX, out of all the indicators that he created, the ADX is the strongest and gives him the best signals. So considering he created that, you need to now put a line of across 25. Put a line at 25 on the right hand side. You've got from 0 up, and it's
0
25.
up to 25. I've got 2 to 66. Yep. Okay.
Okay. So you put a horizontal level across at 25.
There you go.
Yep. And even you can right click it and get more accurate with that.
You're going to be spot on. Come on.
Oh, come on, it's me. Detail. There we go. So if you look at that, you can see it's sort of like.
That's the long way around.
If you only got 2 lines on that, oh no, there is a third.
No,
I see. Yeah.
Look, if you squint really hard, actually you can see it.
Yeah, I can just about see it. Yeah. Yeah, because the ADX is actually the trend line, the trends average, isn't it? Yeah.
Yeah. So
and
that line will go, and it's tricky to read because what you want is it crossing the ADX crossing, but you also want the DI for a long. Obviously, you want the DI plus going above 25 as well. So not just when it crosses and crosses back down, because the ADX will go long when the market is shorting. So even on a downtrend, it will still. So where you are on the left-hand side and the ADX is coming back down to that 25 level and the market's still moving up, that just means that the strength of that uptrend is not strong, is not strengthening. It doesn't mean a downtrend. You've got to learn to read this thing really carefully or it will absolutely nick you. So yeah, it's just, and like I said, you need moving averages. I'll pop them there as well, so it gives me a really clear indication that price action is above the 20, which is above the 50, which is heading in the right direction, which is along.
Really good.
So
really good.
That helps.
Yeah, and really interesting as well, as I say, you know, the way that different people use different indicators. And even MACD. You know, I don't even hear that many people using MACD these days.
Look, as Paul said to me, he said, I can't use MACD, I can't read it. I said, huh? You're not. It shows your cyclicity really, really nicely.
Yeah.
He goes, what do you mean? What do you mean? So I said, you know, obviously next time he comes to Sydney, we've got to sit in front of the charts, not in front of the red wine. Although,
don't be ridiculous.
I was going to say, what am I saying? So yeah, we'll see if that, we're looking, hopefully that trip's on in July as well. Hopefully that'll all come off. And we can
well, Mikey's the key to that.
It's Mikey's 50th birthday and he's stuck in, although they're lifting the restrictions on Thursday night tonight. So
that doesn't mean they won't go back into them. That's the thing.
Oh no, I just think, just if everybody just hurry up and got their.
Yes,
well, over here we've got the potential to extend the lockdown. I think that they are kind of talking about it quite seriously. And if I'm honest, I don't really understand why they wouldn't until the schools break up. It seems a bit crazy to me.
So they're still where'd that go? They're still, what are they doing, Ash?
Well, I think we're due to have almost full normal life by the 21st of June, I think it is. But they're talking about extending it by 4 weeks, which would be when the schools break up, which would seem to be a much more sensible time. I don't know why they chose the 21st of June in the first place. But I don't know. I mean, who knows what's going on with it? We got this Indian variant kind of being discussed quite a lot. But I really don't know what's happening now with the cases and concern and everything else. It's just kind of blown up into a bit of a circus, when it comes down to the media. It's just, I don't know. It's hard to know who to trust.
Politicians.
Yeah, trust those guys. Yeah. Yeah. Well, there's just so many conflicting stories,
Yeah, Dominic Cummings has always got a different twist on politicians.
Oh, yes, he has. Yeah, he has.
That was really interesting, Ash.
Yes, yeah. Well, he's a fascinating character, Dominic Cummings, and he continues to drop the government right in the thick one. So, yeah,
it's hilarious. I mean, all politicians, tend to just ruin it for themselves anyway. So
yeah.
But
Yeah,
I was just going to say, we're starting to get, how are we going time-wise? Because I was just going to
say... Are we avoiding this particular commodity?
Gold. At the moment.
Yeah, nothing much to say about it?
Waiting on CPI on Thursday night at 10:30.
Right, okay.
That could be one way or the other.
Yeah, Ainsley, I can't get away from my opinion that the dollar's going to rally and rally hard on Thursday.
Well,
I know it's only obviously it's just an opinion. Who knows what's going to happen? But I get the sense that the market is gagging to buy the dollar and it is waiting for the right information to do so. It didn't get it on Friday with the unemployment data. Will this give it the opinion to buy? I don't know, but it just appears to me that equities are almost feel toppy and they're gagging to sell off. The dollar feels low and it's gagging to buy up, but it just hasn't yet had the catalyst, and it's not going to take much. But those CPIs, they have been a concern. Inflation is a concern. So I think the dollar's got every chance of rallying and rallying hard on Thursday, and I'm looking at that CPI, but it is all dependent on CPI. If the number comes out tepid, forget it. But if it comes out, I think just a little bit more positive than anticipation, I think we might get a decent rally with the dollar.
Yeah, who knows? I mean, Janet Yellen's made some comments after close market on Friday night, and they were interesting.
Yeah.
So,
and she's respected, isn't she? I mean, this is the thing. Janet Yellen isn't just your everyday U.S. Treasury secretary. She's run the Fed, so she's going to have. I would have thought. I don't know whether she'd have more sway, but I would have thought that her words would echo a bit louder than others.
The only way we're going to find out is obviously when it's announced. We can speculate as much. Yeah, we can speculate as much. And as Lewis has just made a point, he said it's very high, and they're talking about. Janet Yellen was also talking about interest rates. They're putting up interest rates as well. So. So
I'm just reading this from David. Looking into liquidity swaps on Binance would want to be liquidity swaps on Binance. So tricky. Do you know what? I mean, the crypto market is a conversation. I think aside from this, in some respects.
Gold doesn't move because of crypto.
Well, I was looking at the cryptos, and obviously sort of like we've seen another sell-off in right across the board with cryptos, and I was wondering, I was looking at and I was thinking about the potential move on CPIs and then maybe the dollar and everything else on Thursday, and I was wondering, I was looking at crypto and I was thinking, okay, will this one get affected because equities are likely to be affected because of the risk off elements of it, because of the lack of profit that you're going to then have from equities if there's an anticipation of increasing in interest rates, and the crypto space falls into that risk-on environment. So will it get affected? I can't get away from 20,000 on Bitcoin at this stage. I still think that there's a decent shout that it comes down to that particular point. Whether it comes there this time around is difficult to know, and whether it matters. This is really why I'm mentioning this. What do you want to do with cryptos? You know, do you want to interact with them? And if you do, then this stuff just has to be ignored, really. Even though it could come down another 50%, it almost has to be ignored, because otherwise you just get yourself into chasing your tail. You know, the crypto space is volatile. Great for traders in some respects if you trade it correctly. But you could get burnt as well. So yeah, I don't think it sounds too good to be true in some respects, David. I just think you have to be very definite and defined about what your risk is, what your approach is going to be, and where enough is enough, really. Because another big danger with crypto is that people have made money so fast they end up acquiring greed. You know, you almost acquire this kind of like this greedy sort of aspect to you, and without you even realizing it. You know, the money's been so easy to make that you sort of like you start almost yearning that kind of easy money to be made. This isn't going to be easy money in crypto. It's going to take a lot more skill, and I wonder whether we need to take a look at ourselves and saying, do I have the skill at this stage in my career to make money in a market that, yes, could give me a return, but also could run me over pretty fast? And if the answer is no, it's time to sit back and let crypto do its thing on its own in the corner, and come back to it later, in my opinion.
So my question, Ash, I guess this is more of a Shukri question. He was talking about, was it Solana?
Solana, yeah.
The new one.
Yeah.
I'm just thinking, and he was saying, oh, you know, it's really solid, it's really stable, it's got these billionaires behind it, and I'm just thinking, okay, so is this same race, different horse? We've got wealthy people who can manipulate the levels.
Yeah.
You know, you don't call it Bitcoin, do you? Call it Musk coin. So he tweets, it goes up. He tweets again, it goes down. Pumping and dumping is it's just flagrant, isn't it? Really, it's just.
Do you know, Ainsley? I think the point you make is so valid, because the one of the things that we all love about the possibilities with crypto is the decentralization and the fact that we might actually have a monetary system which is controlled by the people and not by the fat cats and the banks. But as you quite rightly point out, what's that, mate?
The dark web.
Yeah, well, yeah, but as you rightly point out, Elon Musk is controlling the price of it. So you still have the fat cats controlling it, even though it's meant to be this decentralized thing. You've got the likes of Elon Musk. You've got the likes of China. All of them just being able to move the price with a tweet. And there's obviously still a lack of regulation in some of the crypto space, not all of it, but in some of it. So, yeah, I agree with you, and it does kind of like then start to ask different questions. Is it how did you put it? Different race, same horse, or same horse, different race?
Same race, different horse.
Same race, different horse.
Same structure. They're all in the same race, but this one now has this and will it get to a point where everybody's trying to have their 2 cents worth, or their $2 million worth, and dilute the market?
Well, this is where I say, well, I don't think you shouldn't be able to do that with a good coin, because a good coin should have they should be inflationary, because they should they should be burning those coins. So that Ethereum proved that it isn't inflationary in some respects, because it wound back the blockchain many years ago, which sort of like shows that it's not decentralized, which is another one of the concerns, that we haven't really balanced out what that even means in some respects. But where I think it's going to get interesting is in 5 years, and this is why I really like cryptos, and why I would suggest that anybody that's interested in it, that doesn't necessarily have good grounding in trading, just buys something and ignores it. Buys what you can afford to lose and ignore it. And then if it comes up trumps, it's going to come up trumps in a big way. If it doesn't, it's a big deal. You move on to the next thing, but you've got to be able to afford that loss to the point you can say, big deal, I'll move on to the next thing. Because if you are sweating on this stuff, I can't think of anything worse to be involved in. And this is the thing about this particular asset class. I think it's amazing, and I think it is the modern way, and I think it's the future. But only if you trade it correctly or invest in it correctly. I think if you do it wrong, you are going to send yourself to the poorhouse faster, probably, than anything else that we've had in history. And that's where I think it's dangerous. So I think it's how you interact with it, and I also think it's how you interpret, the likes of Elon Musk and those guys, and say, let's make sure that they don't matter to our portfolio, because he can drive it like that. And just invest in something which has got a good use case, and get a decent price and sit on it, and wait. Don't go buying Bitcoin at 65,000 when the price had run up a crazy amount already, and say this time it's different, because it never is. That was the worst thing that I'd heard during that point, Ainsley, is the people saying, when I told people my opinion that things don't do that. They don't just go and go and go and go. It may get to 100,000, but it won't do it in one stretch. All I got back was, "Oh no, but this is different." It's like, okay, right.
Of course it
No,
is.
it's Phillips.
Nobody's ever going to take any profit out of that.
Yeah. Exactly.
I mean, the big thing, Ash, on top of that, was the way it's moved, and the way it's shown it has moved, and the way it responds to tweets or the manipulation of the market.
Yeah.
With Bitcoin and with Ethereum and with all the others, and this is the latest and greatest, and it's going to go from here to next week in the space of 27 hours, whatever it is, has been one of the overriding detriments.
Yeah.
To institutional investors who've gone, well, okay, it sounds good initially when it was on its way up, but now seeing the way it's reacted to market, to tweets, they're just saying it's not sustainable.
Yeah, but the thing is,
But the thing is, investors.
Well, but it is, it's a really, really exciting space, really exciting. I mean, if we think about and I would sort of put it in the same category as when we kind of like had that tech boom where the likes of Amazon changed the game. The way that people were going to shop, it changed the game. Cryptos have got the potential to change the game, and so significantly. So if you want that thing that goes from $20 to $700 within within a 5-year period. I know crypto's done that within a 6-month period, but if you want that again, you've got to be looking at cryptos, in my opinion. I looked around the stock market yesterday and nothing excited me. Everything was pedestrian. Everything was just, going to make possibly double. But when you look at cryptos and what people are trying to do, and some are trying to make the world a better place for it, and you look at NFTs and everything else, it's exciting. It really is. And I think that if we're looking at, as investors that might be investing into the future, I think you've got to get your money in some cryptos, but don't be silly about it. Don't be greedy about it. Just kind of like put what you can afford in, pick a decent token or coin, and then just ignore it. Don't try and trade it unless you're a good trader. If you're a good trader, it's a great thing to trade too. But if you're not such a good trader, just go and find something to invest in and just ignore it. That would be my personal advice. And of course, I'm not a financial advisor, but that would be the way that I'd advise my friends to do it.
And that's the thing. The crypto, and I believe a digital currency, possibly not Bitcoin in the future, will be the way forward. And I agree. And it's just like, okay, I get the tech boom. Prior to that was something Jeff and I remember called the .com boom. Yeah. And a lot of people lost a lot of money in that.
Yes. Yeah.
And we're talking about institutional money here, investing kids' inheritance, not necessarily saying, okay, well, this is good, but we can't give you long-term goals because of what's happened recently. We're talking about navy blue suits here. So some of them will be involved in it because it's a family office or for whatever reason, those institutional investors. It's a little bit different when you've got the likes of your very boring banks saying, okay, we're going to have something here, but it's going to be really separate from the rest of your investments.
Yeah.
But you'd be prepared to have this in the high risk category of your portfolio and be prepared, as you said, if it goes, it goes.
Yes. Yeah. Nobody knows what's going to happen with it, but
exactly.
I do think that we are heading into a different paradigm, because I think that we've got the potential to do deals between each other without that middleman, and that's massive. The fact that I could buy a house from you and have no banks and solicitors and all this sort of stuff. I mean, you'd want a solicitor, but you'd have no bank. You have nobody sort of needing to touch the money in between, or whatever product you want. It's just brilliant.
But Ash, you obviously haven't been talking to your mates over in the Chinese government.
No, I haven't actually.
No, they want it. They want a digital currency for the purpose that they can track every transaction you make.
Yes, they do.
Yeah.
Yes, they do. But you can track. I mean, Bitcoin is trackable. It's all, some of the smaller coins are a bit more shaded, but Bitcoin is trackable. This is why a lot of these gangs or a lot of these kind of these dark actors, yes, they may do the transaction in Bitcoin, but they will very, very quickly you swap that coin to something else, because you can log who it is that is transacting in Bitcoin. So we've already got that, and okay, those governments might come out with a digital currency, but it's not really a cryptocurrency, because there's a lack of decentralization straight away. There's going to be a lot of aspects to those currencies which aren't as flexible as the likes of Bitcoin and Ethereum and Cardano and Solana and Polkadot, and those guys are the ones that people will still want to interact with. They won't want to interact with the government coin. They'll have to, because that's how we might get paid, but they won't want to, because it won't have the same freedoms.
Watch this space, guys. Oh, yeah. Who knows where it goes?
Government. Exactly. Yeah.
It's all speculation, and frankly, I wish those who trade in it all the best, and I hope they make tons of money out of it. But it took me 5 years plus to learn how to make money out of currency trading. And I haven't got 5 years plus to learn how to make money out of cryptos. Right?
No, well, this is it, mate. But you're already making money out of cryptos.
Yeah.
Well, yes, I am, but that's by default. That's not my doing, and and I'm happy to do that. I'm happy to give people money to invest it, as long as I know who they are and what they've been doing for the last 12 months or 2 years. That's fine. But I've got absolutely no time to spend to get to know what I know I need to know.
Yeah,
I need to know what drives it, when it's likely to be driven, when tweets are going to happen. I need to know I need to be across all that sort of stuff, and I'm not across it.
Oh no!
And for that reason, I have to leave it alone.
Yeah, that reason you're out.
You're out.
Yeah,
that's right. You're fired. Speaking about out, we need to be out.
Yes, we do. Yes, we do.
And I've got nothing in terms of trades, guys. I've just been through the 30-minute charts, as you've probably seen, and honestly, it's not a market. There's no market here.
I think we're going to go sideways until that US dollar is has got a little bit more direction to it.
Yeah, I think you're right.
And because it's big for gold, and gold will consolidate now. So until Thursday, it's flat as a tack. So there's nothing there. The only other one that I'm going to keep an eye on is obviously some oil. See if I can get a little bit more of a retracement back down now that we've had a solid move up. For me, that's a bit of a wait now. But yeah, gold's going to go sideways until Thursday night, I reckon. Be watching paint dry.
I'm with you. I think it's one of those days that the FTSE's actually moved okay today. It's had a half decent half decent move since we opened up. Actually, not.
You're making more money, yeah.
No, mate, I'm not, because I like to trade the first move, as you know.
That's right. You're out.
Yeah,
That's right. Okay.
I'm out. But I will potentially re-enter again later. You know, now the first one's in the bank, I might re-enter again later, and I'll probably choose the Nasdaq because I think the Nasdaq, if anything's going to suffer, if the dollar strengthens, it will probably be the Nasdaq. So I will try and trade the Nasdaq short at some point, possibly today, but almost definitely tomorrow, if we get those CPIs that support the dollar. But you know, I agree with you. I think it's one of those days that you sort of maybe do some research, maybe do some other work. Fine, trading, I think, is going to be a bit tricky. Do some washing, yeah.
Piss
Behind
off.
your ears. Yeah.
Oh, come on. My youngest just came back from 3 days at camp.
Oh, you've got to. There's no choice. And raining and mud. Good. Happy days.
Yeah, so it's meant to be raining for the next couple of days. So I actually got a cold snap in Sydney. There's snow up on the Blue Mountains, Jeff.
Yeah, I saw it here. And as far up as Queensland.
No, that's at Palaszczuk. The Premier.
Yeah, she's not doing real well. Publicity stakes issue.
Oh, well, no.
Kinda. Why
Not
would you?
really. Don't like her. But anyway, because we all like Gladys.
Well, you know.
Good old Gladys.
I'll stick with the two-headed people down here in Tasman.
The reason they keep you on a little island with that big moat around you.
It's bloody beautiful, I reckon. I love it.
I've got to get down there. Got to get down there, Jeff.
All right, when you're ready.
Yeah, yep. I'll see you there when Concord comes back, and
you've got to bring you've got to bring your Tasmanian tuxedo at the moment, though.
Oh yeah.
Cold?
Yep. No, well, it's not yet. We're only getting about 4 or 5 overnight at the moment, so we've got another 6 or 7 degrees to go down yet.
Yeah, you do minus. You see, you know, for us, cold in Sydney is like a cold snap's like 14, 15 degrees. I'm just like,
I know.
It's not the cold.
It's not the cold end of Sydney that concerns me. It's that bloody humid hot bastard that I don't like.
Oh, that's true.
And the weather's not real good either. I've got to go.
Yeah. Okay. Thanks, AZ. I enjoyed it today. Really good. We will see you next week, and I'll see you in the morning, mate. Everybody else, I will see you in the morning too. Thank you, Mai, for running the show for us today.
Thanks, Mai.
And stay safe as always out there, guys.
Indeed. Thanks, Thanks for being our trading buddies, everyone. Bye-bye.
Bye.